Thanks for tuning in and welcome to your end of financial year Cairns market update. I'm Tim from Toomey Schreiber, your local apartment specialist, and let's jump right in. Locally, we have seen an increase on open home numbers compared to a fortnight ago. We're back up to an average of about 9.5 buyers for every open for inspection. If we have a bit of a deeper look though, this is revealing signs of a very patchy market. 30% of our open homes in the region had 4 buyers or less through. This is incredibly low, and a further 30% had an increase, had in excess of 10 buyers or more through the property. More than likely, these are homes that were having their very first open for inspection, and likely they were priced very well and presented very well as well. So this is showing signs of a bit of a patchy market with a few hot spots in there, and just to understand that buyers are a little bit pickier out there as well. So something to bear in mind if you are considering doing anything. Available stock on market has remained stable, still at record lows at about 630 available listings. We're all aware of what those baselines are from a few years ago. We have also seen a significant dip in investor inquiry. Bear in mind though, this is normal for this time of year. Currently, investor inquiry is at about 10% of overall inquiry. These investors will likely return in the new financial year. End of July, start of August is when we usually see a lot of them start to come back and inquire. A really important thing to note as a property owner in Cairns, we are on the cusp of a 6.7% rate increase, which is on the horizon for us all. This has been passed down from the local council as they've released their new budget for the financial year. Something really important for us to keep in mind, because of course it means every year we've got a little bit less money in our pockets, but of course it does affect the overall yields of any investment property that you do have, and of course long-term affects sale prices too. So something just for you guys to all be aware of, a 6.7% rate increase is coming up very, very soon. As we zoom out though, have a look nationally, because that of course affects all markets. First home buyer grant has been doubled from 15,000 up to 30,000, which is terrific, and their threshold has been increased from 500,000 up to 750. This is really important because historically, whenever there has been anything changed, legislation added, or any kind of stimulus given to a market in time, a short time period that is, the market tends to catch up to gobble up any of the easing that those stimulus have created, so just bear that in mind. Also, average saving rates, very interesting, have decreased from 3.2% down to 0.9%. This is showing that there's obviously a lot of households out there nationally that are struggling to stay afloat with cost of living pressures, but also interest rates, etc. A really important thing a question I want to pose to you is the impacts of immigration on our current economy. You will see on the newsletter below that in March of the first quarter of this year, the Australian government let in the largest amount of immigrants in history. A total of 1,614,000 people came through. This is a very significant number and over 20% up from the same time last year. Our GDP only rose by a mere 0.1%, which is ludicrous. And that just goes to articulate and really just display just how much there is a massive pullback on spending overall. And it paints a picture that possibly our economy is being propped up by immigration. And if that tap is to be turned off, we'll likely see the ramifications of that as well. That is your market update for the end of financial year of 2024. I hope there were some good gold nuggets in there. As always, if you have any questions and there's anything you need, we're always at your service. I wish you a terrific month and look forward to seeing you in July.